SJM stock is currently trading at $128 per share and is down 6% year to date. Now, this is a stock that was up as high as about $143 per share just about a month ago, but it took a huge decline and got all the way as low as $122 per share. Now, the stock price has gone up just a little bit since then, up to $130, but like I said, currently at $128 per share. Now, this is a company that a lot of dividend investors have on their watch list because it has a good dividend yield at 3.08%, but more importantly, this is a company that's been increasing the amount they pay in dividends for 25 consecutive years. So in this video, we're going to be jumping into my stock valuation spreadsheet to see if this is a stock we should be buying or selling. And on the spreadsheet, we have 4 different valuation models. We have Graham's valuation, a discounted cash flow model, a multiples valuation, and a dividend discount model. And all 4 of these valuations will roll into our output tab. But let's go ahead and jump over to our stock screener. If you'd like to be able to download this spreadsheet, then you can head over to my Patreon page at the link in the description. Okay, so the first thing we're going to do is we're going to come up here and plug in their stock ticker, which is SJM, and hit enter. And we can see all of this data is going to automatically load in. We can see we do have some price volatility with this company. Let's go ahead and zoom in and look at a 200-day chart. And like I said, we can see there's a huge decline in the stock price over the past month. Let's come over here and look at the dividend data. We can see they're paying out $3.96 per share currently with a dividend yield of 3.08%. Now, I think something that is worth noting about this company is they have a beta of 0.28. So typically this is going to be a company that is much less volatile than the broader market as a whole, meaning this is a company during a market downturn that a lot of investors are going to look to put their capital in. But let's go ahead and jump into Graham's valuation. And Graham's valuation is a valuation model invented by Benjamin Graham, who is one of Warren Buffett's mentors. And this is the formula he used to calculate intrinsic value. So the first thing we need is our earnings per share, which we have listed right here. We're then going to multiply that by 7, which is the price to earnings of a company with no growth. And then we're going to apply our growth rate projection. And a lot of analysts are applying a growth rate of about 4 for this company. We're then going to multiply that by 4.4, which is the average yield of AAA corporate bonds. And then we're going to divide it by Y, which is the current yield of AAA corporate bonds. And for now, at the time of this video, that is 4. So we can see after we plugged all of this in, the intrinsic value of this company is $64 per share, which is far lower than what the company is currently trading at. Now, it is important to note that the current yield of AAA corporate bonds plays a pretty large role in this valuation. Earlier this year, or excuse me, about a year ago, this was as low as about 2.5 or 2.6, and you can see just how much of a difference that will make in the valuation. Let's go ahead and switch that back to 4 and jump back over to our discounted cash flow model. And in order to perform our discounted cash flow analysis, we need to project a growth rate for the future free cash flows for this company. So what I've done to do that is I've looked at the historical free cash flows for SJM. We can see they had an average growth rate over about the past 4 or 5 years of about 11.15%. Now, due to their industry and analyst projections, I'm thinking this is going to be a lot closer to about 3%. So I applied this growth rate to the future free cash flows of the company and used it to calculate the terminal value, which is the sum of all the future free cash flows past the year 2030. I then took the present value of all of these future cash flows and added them together, which you can see right here. I then added the company's cash and cash equivalents and subtracted out their total debt to get their equity value. And then I divided by their number of shares outstanding to get their discounted cash flow price per share of $153. Now, I think something that is worth noting is that they have taken a dip lately because of the anticipated $125 million hit from peanut butter recalls, but I don't think that's going to affect the overall growth rate for this company. But let's go ahead and look at our multiples valuation model. And the idea behind our multiples valuation model is using a price to earnings multiple, we can see how the market is valuing companies that are similar in structure in SJM and use that price to earnings multiple and apply it to SJM to find its intrinsic value. So what we've done is we've taken 3 companies, like I said, that are similar to SJM. We took their stock price, divided it by their earnings per share to get their price to earnings multiple. I then took the average price to earnings multiple and multiplied it by SJM's earnings per share to come to an intrinsic value of $139 per share using the multiples valuation. But let's go ahead and look at our last valuation, which is the dividend discount model. And the dividend discount model is supposed to value a company based on how much they pay out in dividends and how much that dividend is increasing. Now, obviously, this is a huge dividend paying company, so I think this valuation model does carry a lot of weight. So in order to perform this model, what I've done is I've applied how much they pay out quarterly in dividends, so we can see exactly how much they pay out each year. This allows me to see the dividend growth rate over the past few years, and we can see they have had an average growth rate of about 6.19%. Had a couple years where it was 10%, a year where it was 9%. We can see it was a little bit slowed down in 2019 and 2020, but again, average growth rate of 6.19%. So moving forward, I am going to apply a growth rate of about 5.75%. So when we apply a discount rate of about 8.5%, we can see our intrinsic value for this company is $152 per share. Now let's go ahead and jump over to our output tab. And here on our output tab, we can see all 4 of our valuation models. Grams at $64 per share, multiples at 139, discounted cash flow at 153, and our dividend discount model at 152. When you average all 4 of these together, we can see we come to an intrinsic value of $127 per share. But as a value dividend investor, we do always want to apply a margin of safety before finding our acceptable buy price. So let's say we want to apply a 20% margin of safety in a scenario. I'll hit enter, and we can see based off of this, our acceptable buy price for this company is $102 per share, meaning this is a stock we should not be buying. And I think there are going to be some complaints with Graham's valuation just due to the structure. This company has not that high earnings per share for their structure, and with a high current yield of AAA corporate bonds. Some people may feel this is not the best valuation model, but even if you were to take out Graham's valuation, you can see the intrinsic value does jump up quite a bit to $148 per share, but even at that range, it's still not within our acceptable buy price at $118 per share. Now, something I do like about this company is they do have a pretty wide portfolio of brands, and they are expecting that to continue to grow, so I think that is a net positive for the company. But overall, unless you're just really looking for a quality dividend paying company, I think this is a company that should be on your watch list, but I would wait for it to go a little bit lower before you consider buying. Now, it is worth noting, if we jump back over to our stock screener, this is a company that currently has a payout ratio of about 71%. That is a little bit higher than I typically like to see it, but I think with their business structure, it's not necessarily a red flag. But go ahead and let me know what your thoughts on this company are in the comments below. Do you plan on buying or selling them, or just keeping them on your watch list? Or if you own them, go ahead and let me know. If you'd like to be able to download this spreadsheet, then you can head over to my Patreon page at the link in the description. So thank you guys so much for watching this video, and please don't forget to like and subscribe to the channel.